Thanks for having me back here, Michael.
And again, you're presenting here in a few minutes' time. I know you're on deck, but let's talk about one of the things I love. Sorry, to explain to everybody the kind of work you do besides the technical analysis of everything on a momentary basis, but also you come with that background of what the history of market movements are. You know, really strong history. So you can look and you start seeing patterns along the course of the year that, you know, maybe the easiest cliche is sell in May and don't come back till Labor Day. You know, those kind of simple things, but they come, or, you know, we're in the third year of a presidential cycle. How does that turn out usually, or the first year, that kind of stuff? You always have that as an overlay too.
Yes, markets have very strong seasonality, whether it be equity markets or commodities or bonds, all have seasonality. You combine that as kind of a starting point on investing, and then you look at the charts to see if the seasonality is actually happening. And if it is, then you look at the fundamentals to see if they have confirmed it as well. So you take the three types of disciplines and you come up with a conclusion.
I hope people just heard that. You know, exactly. This is a professional we're talking to, and exactly that. He's trying to line up everything in your favor. I mean, there's no guarantees in the world. It's not a certain world environment, but, you know, by doing the approach you've just described, you start with a seasonal look and say, well, this time of year, this kind of thing normally go up. Let's look at then at the specifics, and then let's look at the fundamentals, you know, and see if they all line up. It's no guarantee, but that's exactly, I'm always trying to explain that. That's how you put stuff in your favor. You know, I wish politicians would understand that when they put policies in place, by the way.
That's right.
Yeah.
Well, if you own securities that are outperforming the market and are in a favorable period of time, you're going to do very well. So that's probably the easiest way of looking at it.
Well, okay, so we're now at the beginning of the year. We are in the first month. You know, January had a tremendous January. I didn't look at the actual number. It was like the best in 30 years or something like that. What is that? Does that tell us anything? You know, the sort of, in quotes, January indicator, or is that just not reliable enough to base anything on?
Well, maybe if you look at the topic that I have for the conference, and that is 2019 year of the commodity. So historically, commodity prices have a sweet spot from approximately the middle of January right through until the end of April. Now this year we got an extra kicker. Remember, commodity prices are very sensitive to what happens with the U.S. dollar index.
Yes.
Well, the U.S. dollar index completed a beautiful double top pattern around the middle of December. It's been going down ever since that time. And when the U.S. dollar goes lower, commodity prices go higher.
No, I think that's one of the key variables that we have to watch. So you're looking for some softness in the U.S. dollar.
Yes.
Coinciding with some strength in the commodity sector. Anything in particular, like I know it's, how can't I say gold, how can't I say oil, and, you know, any particular sectors of the commodity broad-based industries that jump out too?
They all do, but let's start off with gold. Historically, gold bottoms around the middle of December and moves higher until the end of February. And boy, are we into that period right now.
Yeah.
Gold prices just broke out again the last week to a 7-month high. Interesting. Gold stocks have a very similar kind of a pattern, same time frame. Silver and silver stocks have almost an identical pattern. Now, it's kind of a thing to remember when it comes to the end of the period of seasonal strength for gold and silver and gold and silver stocks. There's something that happens at the beginning of March every year. It's the Prospectors Convention in Toronto.
Yeah.
When you reach the Prospectors Convention, that's the time to take your profits. This year, the Prospectors Convention is between March the 3rd and March the 6th.
So that's your exit point. You know, the excitement's built and peaked at that point, so that's your exit at that point.
Yes. What, of course, you will do is look at the technicals to confirm that.
Yes, of course, yeah.
But it's
your roadmap.
That's correct, yes.
Yeah. Sorry, I can't, you know, just because time's short and I know you've got to present, I've just got to come to one of the trades that you've made a ton of money for our audience, and, you know, for your people at timingthemarket.ca, etc., has been the gasoline trade. Because it's been incredible how often that's worked out. The percentage of times, no picking, no choosing, the seasonality of that has been so strong. So maybe elaborate a bit for the audience on that.
Yeah, seasonality is very strong from approximately the middle of January until approximately May of each year. On a technical basis, it's kind of not doing it yet.
Yeah.
It's forming a potential reverse head and shoulders pattern, hasn't actually done it yet, so you may want to wait until it actually breaks out. The ETF that you want to look at is symbol is UGA. So if it breaks out of this current pattern, that's going to be your signal to go for a seasonal trade.
And of course, you'll be writing about it at timingthemarket.ca, so they're not going to have to do any guesswork themselves.
That's
They can just keep checking in with that. But I forget what the numbers are, but I've done that trade thanks to you. You brought it to my attention. No, it's quite a while ago now.
Yeah.
I've made money, and it's no guarantee and all of that stuff properly. UGA is the symbol, but man, I've done well with that, as our audience who followed through, because that seasonal pattern is as strong as I'm aware of for basically anything. Like it worked out 19 out of 21 times, for God's sakes.
Yeah, it's been a very reliable one, but there's some other seasonal trades that are clicking in now, whether it be lumber and forest product stocks, or energy stocks, or base metal stocks. There's any number of seasonal trades which are clicking into the markets right now.
And as you say, you start hearing about that seasonality, you look at the technicals and then the fundamentals. Just an interesting sidelight, you may have caught Joseph Schachter last night speaking, and Joseph is very excited about the opportunities, and he says it's not a trade per se, it's to take a position per se in the oil and gas sector.
Well,
that would line up.
I'll be giving an update in my presentation. I'm more excited than Joseph in kind of a strange sort of way.
Wow.
You see what happened during actually Thursday of this past week. The price of crude oil completed a perfect reverse head and shoulders pattern.
Which means, though, what?
Implying significantly higher prices. Broke up on the 54.50 level, implying a technical target of $67.
Wow.
At a time when the seasonality for crude oil is just getting started.
Yeah.
Crude oil seasonality moves from middle of January right through until at least June of each year. So combination of seasonality and a beautiful technical
chart
means that we're getting lined up for a pretty good move in crude oil in particular.
Have you looked at whether the stocks follow the pricing? How strong is the correlation between oil stock movements and oil prices in this season?
Very high. Looking at XEG, which is the oil and gas energy ETF on the Toronto Exchange, it's forming a similar pattern. It hasn't completed the reverse head and shoulders pattern yet, but it's getting very, very close. And if it breaks just a little bit stronger and breaks above this pattern, then the energy sector in Canada also is in gear.
Talking with Don Velo, timingthemarket.ca. Only a minute left. Anything else you want to bring to our attention, in this time of year?
Yeah, lumber prices broke out in a beautiful reverse head and shoulders pattern just last week. And guess what? The forest product stocks like West Fraser, Canfor, Interfor, all had beautiful moves last week. Westfor, for example, completed a beautiful double bottom pattern just last week, and it looks like it wants to go higher. Seasonality from October to the end of April. We're right in the middle of the period of seasonal strength. Also an excellent area to look at.
And another great example, as you say, you look at the seasonal pattern, you're in a sweet spot, but then you look at the technicals and say a little more timing, hence timingthemarket.ca, but a little more timing, and so those are lining up. So, yeah, that's exciting.
Yeah, there's lots of interesting opportunities.
Just, gosh, I don't have much time to... I don't. You're going to have to come...
Anyways, guys, that's just a little bit of stock tips. Looking at the seasonality, looking at the head to shoulders movement in the markets, when it tops down and when it tops up, and when it's the best time to buy. Anyways, guys, I want to know what you guys think. I'm not giving any financial advice. I just had the perfect timing to have this stock analyst, and I think it was called something.ca. You could look it up, timingthemarket.ca, I think it was. Look it up. Let me know what you guys think in the comments below. Is he right or is he wrong? I'd like to know. Thanks for watching.